Hello everybody, Jonathan Fox with Compass here. I hope this message finds you happy and healthy at this very moment. Friday evening, I'm getting ready to end what has been a pretty wild week in real estate. I think we can all agree in the world. And I felt the need to hop on here and give you some straight information and talk as far as this coronavirus outbreak and what impact that's having to our local real estate markets. I've received a number of calls, texts, and emails in the last few days as we've seen the stock market go to historic lows. And then as it closed down today, the stock market had one of the best days that it's had in the last 2 decades. So there's a lot of volatility out there. There's a lot of fear, and it makes perfect sense as to why. However, in spite of all the insanity, factors that drive our local real estate market are still very much intact. And I'm here to say that our local real estate market, as a result, is still very much thriving. We are lucky that our largest industry in Washington, D.C. and points surrounding is the federal government. And if anything, right now the federal government is not laying off people. They're expanding the scope of what they do. We have a lot of jobs that are also servicing the federal government, which right now are very much alive and doing everything they can to help solve part of this crisis. Not to mention tech companies, quarterly it seems, are relocating their headquarters or large division of what they're doing to our area, so they too can have a seat at the table in Washington, D.C. Amazon HQ2 probably rings a bell for a lot of you, but there's many more examples of that. And so these high-paying jobs that are relocating to Washington, D.C. are creating incredibly low unemployment and are driving the other side of that coin, which is lack of inventory. There are lots of people coming here and our space hasn't gotten any larger. Our area is expanding to some degree, but the reality is the Beltway and points inside the Beltway are not growing. We're out of room. So the supply and demand curve, if anything, is just getting worse and worse for buyers and better for sellers. So those economic factors that drive our economy don't really care much about coronavirus right now. The second part of that is that interest rates, and this is important, are still at all-time historic lows. If anything, this new virus ensures that they're going to stay there for probably longer. I'm sure you've also seen those headlines where the mortgage industry has something like $2 trillion worth of refis and purchase business trying to go through the system right now. It's completely overwhelmed. That's not arbitrary. The reason it happens is because interest rates today are just about as low as they've ever been in the history of certainly my lifetime, but probably yours as well. I just closed on a loan for a client of mine last Friday, and the rate was sub 3.5, and that was putting 5% down on conventional. There are many rates out there that are in the low 3s, even high 2s in some cases, which should matter a lot if you're thinking about buying a home. And buyers are paying attention right now. And so buying demand just completely catapult into our spring market. So that's a really large factor in all of this. If interest rates, and I'll be candid with you, if interest rates were 4.5% or 5% right now, we might be in some trouble. But they're just far from it, and the government is doing everything they can right now to ensure that they remain low. And to tie this all together, the fact that yesterday, as I mentioned, the stock market had one of its worst days. Today, it has a great day, one of its best in the last 2 decades. And I'm sure we're in for a lot more of that, by the way. That volatility that we're seeing across other markets, oil prices, I mean, there's many factors that play into that, which are outside of the scope of this video. The fact is that real estate is an incredibly safe and secure and largely stable asset that right now a lot of investment is moving toward. When things are unsteady, there is still a demand for housing. Unlike stocks, you can't move into a stock or a bond. It's only worth whatever it's worth that day. But in real estate, for all of the factors that I outlined, space is limited, supply is way low, demand is way high, our population is increasing and increasing. There's just a lot of emphasis in putting money in something more stable, which is real estate at this time. So we're even seeing investors right now looking for the safe bet, and they're finding a home in our local real estate markets. And to all my sellers out there, now more than ever, buyers may not want to come to the open house. They may not, more than ever, want to actually visit the home without being certain it's on the short list. 3D tours, imagery, of course, high resolution of many rooms in the house, having your best content online front and center. These are all things that you can control and will make a huge impact on whether a buyer puts your home in their shopping cart for what they might only see 3 or 4 maybe 5 homes on a Saturday. They're not going to see 10, 15, 20 at open houses right now. They're really going to diminish their search. So be strong there. And of course, if you're working with me, that's something that we do all the time, but you may not be. And it's just something you want to think a lot about right now. To tie this all together and speak directly to the health of our local real estate markets. Buyers have been asking me for months, are we heading towards the end of some type of bubble that's getting ready to burst? The markets have been overheated, prices are sky high, inventories way down, and I believe that's a valid concern, but I want to speak directly to that at this point. Markets are driven by, bubbles are driven by markets that are driven by speculation and ease of access to free money, credit, right? I was around for the 2007-2008 collapse, and I recall very vividly in 2005, 6, 7, the mindset of a buyer was, it doesn't matter because it's going up anyway. Like I must have heard that dozens of times. People that were underqualified, that bought homes without much thought, without a lot of planning necessarily, were just thinking, who cares? The mistake wouldn't matter if I made one because it would still go up in price and I could just unload it or sell it. So the market was completely fueled on the idea that things were going up no matter what. That is not really what I'm hearing from folks today. Sure, the market may go up. That's not the reason that I'm finding a lot of buyers are planting roots where they are. And the second thing is the documentation and lack of credit. It was very common in 2006 and 7 that we had stated income, no documentation needed, sign on the line that's dotted, 100% financing, that's all you needed was your signature and maybe some closing costs, which, oh, by the way, you could wrap up into the deal so a seller could help you with those as well. You were finding buyers that had no business qualifying for homes well above their means and with nothing more than a signature on a piece of paper to consummate the transaction. Today, lending and oversight in lending has never been stronger. Lenders want to know where that $10 came from sometimes. I mean, lenders, underwriters, that is. The rules and hoops that a lot of buyers have to go through right now to complete their loan, to qualify for a loan in the first place, are pretty arduous and are just the opposite of all of that. So you have people that are truly qualified. Now, you might argue that someone shouldn't spend 40-45% of their income on housing. There are many markets, including ours, New York City, San Francisco, where unfortunately for a lot of first-time, even second or third-time buyers, that's just the reality of the situation. They cut from other areas. But the fact is, you do need to have real income to back up that purchase. You can't just access a loan without having the means to pay it back. And lenders and underwriters alike, Dodd-Frank help with this, are just quick to sort out those who are not really qualified. I just don't see the speculation. I just don't see the credit, the ease of credit being what it is. And so therefore, a lot of the prices increases that are occurring, albeit quickly, rather organically. So let's just finish here and say that the markets are healthy. Buyers are buying, sellers are selling. I put a home under contract yesterday on the worst day of the NBA just canceled everything, the NHL canceled, and the stock market collapsed. And I put a home under contract for a buyer that's relocating to the area. So that's my 2 cents on what's going on. Please stay safe. Please be happy. Please be healthy. Do what's right. Look out for the people that maybe are in your neighborhoods that can't take care of themselves. And I will promise to keep you posted as things change.